welcome to Breaking Bread presents part 2 of my LeGhetto series. Today we are going to dive in just a little deeper into trading on the lower time frames. I just want to share with you guys some simple things that you can do on the lower time frames for better entries for both options and the future side of trading. Like I said in part 1, and if you have not watched part 1, please take a moment to go do that. But in part 1, I spoke about the higher time frames being our goal, our destination. And we're going to use the lower time frame as our map to get us to our goal. As traders, we have to understand that price is not moving just to move, right? It has a goal, it has a destination, it has a target. It's being pulled to something. And once we identify that on the higher time frame, then we can use the lower time frames to help reach that goal, help get to our destination, right? Help us identify where a price is being pulled. So if you think of it as a higher time frame telling us that we're headed to Disneyland, we're going to use a lower time frame to help identify the best route to get to Disneyland. Far too often as traders, we either enter too early, too late, or we hesitate, or we just don't take the trade at all. And it's not because we don't know the direction and price, because sometimes we definitely get that part right, but it's the entry part that we struggle with. And hopefully with today's session, that will help you guys find better entries. All right, so some of the things we're going to talk about in today's session is I'm going to do a brief recap of part 1. I'm going to talk about the higher time frames, lower time frames. I'm going to share with you guys my favorite combo. I'm going to talk about the leg of price. I'm going to talk about swing points, best entries, and then I'm going to take it to the charts. And then, of course, I'm going to end with the bread and butter, which is just a brief recap of the things, some of the things that we're going to talk about in today's sessions. All right, so what is LeGhetto? These are your lower time frames that are used mostly by day traders and scalpers. Now, I put the la on in front of ghetto because I'm sure you know a trader that says trading on anything on the 5 minute and below is ghetto. So I put the la in front of it just to let you know that it's comfortable down here. It's safe down here. It's okay to come down here and trade. It's a safe space, I promise you. LeGhetto, like I said, is the 5 minute time frame is down. So 5 minute, 3 minute, 2 minute, 1 minute, 30 seconds, 15 seconds. So when I'm talking about LeGhetto, these are the time frames that I may be talking about. Higher time frame, lower time frame combo is using higher time frames to identify the overall market trend or key levels of support and resistance. This is going to give you your big picture. Now you want to build your confluence between your higher time frames and your lower time frames. Now your confluence, this is the alignment of combination of multiple technical factors or signals that point to the same trade direction. It increases the probability of a successful trade by confirming the setup through different methods. So it's just combining signals from both the higher and lower time frames, which gives you more confidence in your trades. So for me, if I see on the higher time frame is saying we're headed to the downside, I go to a lower time frame and I place my fibs on the chart and I see a red shooter coming off my 78 level. That is all in confluence with what the higher time frame is saying. I am looking to take entry on that trade. I only need 2 things in confluence. Some traders need 10. I need 2. Give me 2 things in confluence with what the higher time frame is saying. I am going to look to take entry on that trade. Now, your higher time frame, lower time frames, your higher time frame could be the year, the quarter, the month, the week, the day, the 4 hour, the 1 hour. Your lower time frames, 15 seconds, 30 seconds, 1 minute, 2 minute, 3 minute, 5 minutes, could be considered your lower time frame. Now, I use multiple time frames to build my confluence. So once you identify the trend and see price coming off a major level on the higher time frames, then it's time to drop down and identify if you have confluence with what the higher time frame is saying. The same thing you look for on the higher time frames is the same thing that you're looking for on the lower time frames. So like I said in the part 1 of this session, are we in a range? Are we breaking out of the range? Are we coming off major levels? These are all things that you're looking for. It doesn't matter the time frame that you're looking for this information. So for me, my favorite combos, I use the 4 hour with the 15 1 minute, or my baby is 1 hour, 5 minute, 1 minute, 30 seconds. So if 1 hour is telling me which direction we're headed, I'm marking my major levels off the 1 hour time frames. I'm going to go to the 5 minute time frames, and I want to see the same thing on the 5 minute time frame that I see on a 1 hour time frame to help me build my confluence. Then after that, I'm going to go to the 1 minute, sometimes the 30 seconds, to look for earlier entry once it confirms what the 5 minute is saying and what the 1 hour is saying. If the 5 minute does not align with the 1 hour, I'm not taking a trade. If my 1 minute does not align with the 1 hour, I'm not taking the trade. I have to have confluence on both of those time frames. If I don't, I cannot taking the trade. I'm not taking the trade, right? So just make sure you are building confluence with what the higher time frame is saying. Now, you can definitely go against what the higher time frame is saying. You definitely be profitable that way. But for me personally, and especially if you're a new trader, just go with the flow of what the higher time frame is saying, right? I'd rather you guys go with the flow than against the flow. Going against the flow just seems like more work, right? If you could just let it flow and let it ease and let price do what it wants to do based off the higher time frames, that's easier. It doesn't feel like a job to me personally. But again, you can be profitable. You definitely can. But just keep in mind that is not the highest probability moves that we want to catch in the market. So here in this example, I have the 1 hour time frame, I have the 5 minute time frame, I have the 1 minute time frame, right? If I'm looking at the hour time frame, I have price respecting a major level here and a 50% level, which is the red line, right? So I have price respecting that area. It tried one time, it failed. It's trying again, it's failing. So now I'm gonna go to the 5 minute time frames, and I want to identify what the 5 minute is saying, right? So this is the wick that is being created here, right? Yeah, so this is the wick that's being created here. You see price push down, started making its way back up. If I trade the scrap, this would be a 212 to the upside, right? A 212 rev to the upside. If I trade the break and retest, we have price breaking back above this major level, coming back and retesting this major level, leaving that wick behind and starting to head back up to the upside. So it doesn't matter what you trade, right? You just want to make sure you have confluence on all those time frames, right? This could be the VWAP, this could be the EMAs, right? It doesn't matter. Just make sure you're building that confluence. Now, after you have that, you can go down to that 1 minute time frame. You want to identify its price in a range. I'll talk about this again in part one of this series. You want to identify if price is in a range. If you're looking for price to head up to the upside, your entry should be coming off your level of support. If you're looking for price to head to the downside, your entry should be coming off your level of resistance, right? To head to the downside, right? So if I go down here to the 1 minute time frame, is it consolidating? It's definitely in a range, and it's slowly starting to make its way back up. Just keep in mind when price is in a range, this is them just building gas, right? Taking all this liquidity, if that's what you want to call it, to make a strong move whenever you want to break out of that range. So that's the same thing here. Price is building gas. If my higher time frame is saying to the upside, the entries I'm looking to take should be coming off my level of support based off the strat. You can take this 2-2 rev to the upside and see if that's the trade that's going to be profitable for you. Now, again, you can play the break out of this range. Like I said, I'll talk about this in part one. You definitely could play the break outside of this range, but just keep in mind it's a probability of price, a high probability of price coming back inside this candle that broke out this range and possibly retest the top side of this range in this example to continue heading back in the upside, right? So this is why you want the best entry possible. Because if you did play this breakout of this range, and we know it's a high probability of price coming back inside this candle, or at least retesting the top side of this range, will you hold and see what price is going to do? Are you going to take profits and look to re-enter after it retested that area? These are all things that have to go through your mind. But if you're taking the trade that as close as possible to this important area here, that's going to give you more wiggle room, right? That's going to give you more room to breathe to see what price actually wants to do. So just keep that in mind when you're playing that breakout of the range. Here you got the 15-minute and the 5-minute time frame. It does not matter what time frame you want to make your higher time frame. If you want the 5-minute time frame to be your higher time frame, that's fine, right? The 15-minute time frame, that could be your higher time frame. You have to do what works best for you and your trading personality, right? If the hour is too high for you and you love the 15, then go with the 15, right? It's totally up to you. So I'm looking at this on the 15-minute time frame. I see that price is respecting this major level, right? This major level here. We see it swept these highs, right? And it started making its way back down. It did it again. It pushed above that major level, started making its way back down. It's respecting this VWAP, right? So if you trade VWAP, there you go. If I go down to a lower time frame, if I go down to the lower time frame, see the same story, right? We're making lower highs. So if our higher time frame is saying to the downside, then the entries you want should be coming off your level of resistance. Now you're looking at this and you're probably like, well, it didn't quite get there. No, it doesn't have to touch this, but as closest to this level of resistance you can get is going to be your best possible entry, right? We are making lower highs. Price reached for this level at this range. It didn't quite get there. Right now, based off your strategy, how would you get into this trade, right? If you trade the scrap, this is a 2-1-2 rev to the downside. If you gotta wait for price to get below the VWAP for you to get into this trade, then that's your entry there. If you're playing the break out of this range, like I said, it's risky, it's safer. It is definitely a safer entry, right? Because you for sure know, okay, it might be time to go. But again, like I said, it's a high probability of price coming back and retesting that area. So if you got in on the break here, are you still holding when price pull back? Are you cutting and then you looking to get back into this trade, right? Are you going to hold through and see what price does based off what the higher time frames? So it's totally up to you. But I want you guys to be confident up here. I don't want you confident down here, which is fine. It's definitely fine. But just understand the risk that's involved um, when playing the break outside the range. So just keep that in mind. All right, so let's talk about the leg of price. This is when price is trending in a particular direction before pausing or reversing, right? So it doesn't matter what your leg look like. A leg is a leg. This is when price is clearly moving in a particular direction before pausing or doing a full-on reversal, right? I don't want to say before pausing, but it's not pausing and it's not reversing, right? It's clearly trending in a particular direction. So I marked out some of the ranges here, right? And then this is the leg of price, right? We're making a leg down. Then we made a leg up. We range. We made a leg down. Then we made a leg up. Then we range. Then we made another leg up. Then we range. Then we made another leg down. Then we range, right? So it's this leg part that I need you guys to identify, right? If you come down to the lower time frames or even on the higher time frames, you want to look for this as well. But you want to see if we're already in the leg of price. I always say if we're at 1 to 2 candles already in the leg of price, meaning if we are in a downtrend and price has already put in 2 candles um in the in a particular direction, maybe 2 to 3, no more than 3. After that, leave it alone. Leave it alone. It's a high probability once you get into that trade, it's either going to be done or it's got to pull back and get some gas. So don't even put yourself in that situation, right? But I want you guys confident up here. I want you confident here to take this up. I want you confident here to take this up. I want you confident here to take this down. I don't want you already in the leg of price and now you want to be confident. Why couldn't you be confident here when price told you it didn't want to do, right? Why couldn't you be confident there? Why couldn't you be confident here when price told you it didn't want to go after 3 tries and then it finally dropped? That's where I want you to be confident at, right? And like I said, when price break outside of the range, it's a high probability of price coming back to retest that area before continuing. So it's up to you to decide if you want to play the range breakout. Do I want to hold through that pullback when price pulls back? Or do I want to cut and just look for re-entry? Because that's definitely a possibility. Range breakout here, price came back and retested this area, right? So it happens. It's going to happen. Slight range breakout here, retrace of that area, continue down, right? So just keep that in mind. Do I want to hold? Do I want to hold in those situations? That's something you're going to have to decide in a moment. But I want you guys to be confident off your resistance area if price is headed to the downside. I want you guys to be confident with price coming off your support level when heading to the upside. All right, so let's talk about pivot point candles. Now, I look at pivot point candles when you see price clearly trending in a particular direction and it runs into a wall, turns around, leaves this long wick behind it, and start heading back in the opposite direction. Those are the pivot points candles that I'm talking about. But a swing high is where a price moved up, then reversed downwards. It's higher than the candle that came before it and after it. Your swing low is where a price moved down, then reversed upward. It's lower than the candle before it and after it. So what could that look like? We have a swing high here. We have some swing lows here. So we know candles anatomy is open, high, low, close. We know that price is going to put in an open, a high, a low, and a close. An open, a low, a high, and a close, right? So if we look at the candle before it and after, we have a high put in here, a high put in here, and then we have a high here. So this high is higher than the candle that came before it and higher than the candle that came after it. This is your swing high. Your swing low is the reverse. We have a low put in with this candle, a low put in with this candle, and a low put in with this candle. This low is lower in price than the candle that came before it and the candle that came after it. This is your swing low candle. So it looks like price was pushing in a particular direction. It ran into some type of wall and started heading back in the opposite direction, right? Same thing here. Price was pushing in a particular direction. Before this candle even closed, it started making its way back down. But that's what you're looking for, right? That long wick. It looks like it rejected or bounced off the area. That's what you're looking for. So I'll put this slide in here just to see if you can identify them on your own. I marked a few on the next slide. So go ahead, pause it, see what you come up with, and let's see if we have some of the same answers. I did mark a few. All right, so here, let's look at it. We have a pivot point here. We got the candle before it, the candle after. This is the lowest low between those two candles. So this is a swing low. We have a high, a high, a high. This is the highest high of the candle before it and the candle after it. So this is the swing high. We have a low, another low put in, and then a low here. This low is lower between lowest in price of the candle before it and the candle after it. We have a high, a high, a high. This candle is higher than the candle before it and the candle after it, right? Now, the only one I'm not going to count here is this one. Now, granted, there's some other swing highs and swing lows in here, so don't get that twisted, right? But you see how this high is higher than this high and this high. But the candle I want you guys to identify is when we run into a wall and clearly start trending in the opposite direction. That's what we want to look for. All right. This one, it ran into something, but it did not continue trending to the downside, right? Next candle soon just flip back up, right? So that's not the swing highs and swing lows I'm looking for. I'm looking for the ones that clearly ran into something and started heading in the opposite direction, right? Now, I don't want you guys to be such a stickler of the rules of, oh, it has to be the highest high or the low. It really doesn't. Just go with what's relevant with price right now. Because if you look at this swing high and this swing high, which one would you go with? Well, go with the one that's most relevant to where price is currently, right? And that would be this one. But they're both pivot points. It's just one is better than the other, in my opinion. And I'm going to show what that means. All right, so for your best entry, I'm recommending that you enter between the 50% and the 78% fib area. So wait for price to pull back into this zone for entry on the smaller time frame. So that would be between the 1 minute and the 5 minute time frame. I'm not recommending the 30-second to you. You get down there on your own time. But between the 1 minute and the 5 minute time frame, in between those zones, once you have confluence with what the higher time is saying. So those pivot point candles that we talked about, the rejection bounce candles, those wicks. If you trade structure shift, so breaker structure, market structure shift, price breaking out of the range, right? Those are breaker structures. And then you want to make sure you're building confluence off your entries, right? So if the hour is saying to the downside, I want the 15 to 5 minute to say that, whatever that middle time frame is, and then I'm gonna go use the smaller time frame to see if we're in the range first. And if we're in the range, then if we're headed to the downside, I want price to come off my resistance level. If we're heading to the upside, I want price to come off my support levels. I'm gonna take it to the charts and I'm gonna show what that looks like. All right, so here we are on NQ. So we're on the future side. Let's turn some indicators on. Now, I don't use these indicators, but I just want you guys to see. Um, it doesn't matter what strategy you use. It's the same thing we're looking for, right? Our entries just might be a little off based on your rules, but it's the same things that we're looking for. So I have the 1 hour, 5 minute time frame up here. If I'm looking at price on an hour time frame, it's saying to the downside, right? I normally come on an hour, mark my levels, right? I'm not gonna do it today, but if we're just eyeing this, it's look like it's saying to the downside, right? You can look at this candle right here, and you're like, well, it's leaving this long wick here in an hour, but keep in mind it takes an hour for this candle to close, right? So the last candle that gave me the full information was this candle here, which is making a lower high. So I'm gonna go down to the 5 minute time frame, and I want to identify if the 5 minute time frame is saying the same thing. If I look at it on the 5 minute time frame, we clearly got price was heading to the upside and made a strong push to the downside, and it's currently looking like a pullback to head back down to the downside, right? So if I look at it on the 5 minute time frame, are we in a range or are we in the leg of price? If I'm looking at it, it's looking like price is in a range, right? So when you come down to the 5 minute time frame, this is where you can throw your fib on your chart, right? And if you don't know how to use fibs, I got a whole series on fibs. Um, so you can go from this high to this low. You're looking for price to get inside this range, but you want to get price as close as possible. The entries that you should be taking is off the resistance levels to head back to the downside. Now you can go from this high to this low, or you can go from this high to this low, right? It doesn't really matter which one you do. Just make sure it's relevant to where price is. That's why I said don't be a stickler to what the rules say in trading. Like you got to create your own rules when you're trading because you got to do what works best for you, right? So the entry you would look to take is when price is inside the range here, but you want to look to see if we're headed to the downside. You want to get this price candle as close as possible to this resistance area to take this down, just to give you more wiggle room, just in case price wants to pull back, play around, chop, whatever, before it continues want to go to the downside, right? So we're going to look to take entry here. Now you can take entry when price break outside this range, but like I told you, it's a high probability of price coming back to retest this area to continue to the downside. Now you might not take this uptrend candle here, but based off the scrap, you'll take a 2-2 rev to the downside. You definitely would do that. If you trade VWAP or EMAs, you probably let price get back below this EMAs, right? It's not quite below the VWAP, so I'm not sure what you would do in that situation. But stick to your trading plan, stick to your strategy and how you trade. Right, so let's run it forward. All right, so like I said, you could play to break out of that range, that is fine. But if you're getting in on this candle and you're playing to break out of this range, I said it's a high probability of price coming back and retesting this area. Sure enough, it did. So let's say you took none of those entries. Well, that price set up for you again. We already know the higher time frame is still saying to the downside. This is just looking like a pullback to head back down to the downside. Well, we're going to come on here. We're going to find our swing high and our swing low, and we're going to connect our fibs. The entries we want to take is going to be in between this range. Let me delete this. It's going to be in, oh, sorry, I deleted the wrong one. All right, so that's the swing high. That's the swing low. You look at here, any of these candles could be your low. Like, don't be so stuck on, well, is that the lowest low? You're overthinking it. You're overthinking it. Price inside this range, we want the candle closest to where we can get price off our level of resistance to take this back down to the downside. It gave two opportunities here for price to do that. Now, again, you can wait for a price to break below here and take entry. You definitely can. It's just a high probability of price coming back to that area. Can it keep dropping? It definitely can, but it's a game of probabilities. It's a game of probabilities, right? So just keep that in mind. Let's see if it came back for that one. Right, so it broke through. It did come back and retest that area, and then it made a higher low, and then came back inside that range, right? But this is the risk that you take when you're waiting for price to break out that range. It's a high probability of price coming back to retest that area. And also keep in mind, we talked about price being in the leg of price, right? I said give it maybe 2-3 candles. After that, leave it alone. Leave it alone. This is definitely price trending in a particular direction. I say leave it alone because by the time you get in, especially if you're waiting for price to break outside this range, it's going to come back and retest this area. So just let it come back and retest, and then you can look to take entry or just leave it alone, period. You have to understand price is just not going to trend in one particular direction all day, right? It's going to come back. It's going to pull back and get some range, right? Some range. It's going to pull back and get some gas, right? It's going to do that. So you have to keep that in mind. Once you identify price, this is a lot of candles. Look like we've been doing this a while. Well, wait for it to pull back and come get you, and then see if you want to continue heading back down to the downside. So just keep that in mind when you're trading. Are we in the leg? Are we 2 to 3 candles in? If we're 2 to 3 candles in, just go ahead and let it go. But again, you can play the break out of this range, but just keep in mind the risk involved when you're doing that, right? And if you're looking at this and you're probably like, well, yeah, it did 2 to 3 candles, but it breaks out the range right there. Take that risk then. Take that risk then, right? Go for it. Go for it. But I want you confident here. I don't want you just now getting confident here, right? I want you confident here. I want you confident here. I want you confident here. I don't want you confident here. But again, it's fine. Your confidence can kick in here, but let's start building our confidence to where price is coming off an area that's in high confluence. You got EMAs, you got VWAP, right? You have all this in your confluence here, and it's coming off the level of resistance. It's building confluence for what the higher time frame is saying. This is where I want us to be confident at. So let's just keep that in mind, okay? All right, I want to go look at Monday's price action real quick because I want to show it pre-market. All right, so if we're looking at Monday's price action before market, where are we in here? This is what I want you guys to identify. And this is what I said. It doesn't matter what time frame we on, you want to identify. Are we in a range or are we in the leg of price? What are we doing? Are we building gas? What are we doing? So if we look at this on the 1 hour time frame, we are clearly in the range just by looking at this candle, right? Clearly see price is stuck in between here, right? So if you're looking at this, you probably won't have a bias, right? You can lean one way more than the other, right? But we are clearly stuck inside of a range, right? Even if you don't want to look at this candle and you just want to look straight across here, we are clearly in a range here, right? So sometimes you have to wait for price to talk to you, right? So let's let price talk to it. Let's not just take a trade and assume it because we got a price gap right here, prices might be pulling here. Or we can go take out these highs and see what price does there. Let's wait for price to talk to us, and then let's listen to it. So if we look at this on an hour time frame, what did we do? We went over here and we swept these highs. Now, if you trade that, then that's definitely giving you confidence that price should be heading to the downside. We look at it on the 5-minute time frame. We see price was in a move to the upside, but currently right now on a higher time frame, it's saying it doesn't want to go to the upside. If I look at it on the 5-minute time frame, it's saying the same thing, right? It doesn't want to go to the upside. So we have to trust that. We have to trust it to the downside, right? So we're in the leg of price. Price is heading to the downside. It appears price is heading to the downside. So do you want to take entry or do you want to wait for for the higher time frame to give you confirmation? Because if you look at it, yeah, it swept those highs, but it still isn't saying anything right now. So do you want to take the trade or do you want to wait until price gives you for sure direction of what it wants to say? And I hope you will want to wait for price to give you clearer direction to what it wants to do. All right, so we look at it on 1 hour time frame, still not telling us nothing. We are still inside this range. It's best to just wait until price gives you direction. Now, if I look at it on the 5-minute time frame, right? We made a strong push to the downside. We broke below the VWAP, the EMAs. It's holding this VMA. It's holding this EMA Um, and it looks like it's making a strong push back to the upside, but the higher time frame is not saying anything. Remember, if one time frame is not saying, then none of them is saying nothing. We got to have that confluence. All right, so if we look at it on the hour now, we definitely are making lower highs, right? We have an inside candle on the hour time frame. We're just reading price, right? Now it's looking like price is trying to make a strong push to the downside to come get this price gap, but our target is going to be these lows here. So if I'm looking at this on the 5-minute time frame, well, I'm going to put my fibs on here and see where I could have taken entry on this trade, right? This is the highest high. This is the lowest low. My entry should be coming off our level of resistance to head back to the downside, right? That's what you're looking for. So again, be confident here, not when price break outside this range down here. Can you definitely get in right there? You definitely can. But like I told you guys, it's a high probability of price retracing back to this area, right? Now, price might not even just be ready right now. It might not drop to the downside. It might just range the whole day, right? But we just gotta play what we see. We just gotta play what we see. But I prefer if you guys wait for price to give you clear direction that it's clearly saying to the upside or to the downside instead of trying to play inside when price is clearly inside of a range, right? But right now it's looking like it wants to push to the downside. Right now it finally broke outside this range on the hour time frame. It's clearly saying to the downside, right? It came and got this price gap, but it definitely would have been a good opportunity for you to take this trade. So let's look at this one right here, because this definitely came into this area and rejected and headed to the downside, right? But at that time, the hour wasn't talking to us, right? It wasn't talking to us. We were still inside this range. I don't want you guys trading this. Let price clearly tell you it doesn't want to do something, right? We started making lower highs. We look at it on an hour time frame. It's the same information, right? It's getting inside this 0.78 and this 50% is reaching in here. Now we starting to lose strength, right? All we can do is read what price is saying. And that's the way to reprice. That's the way to reprice. And it finally just dropped. Did it come back up to that line? Let's see. So it eventually came back up to that area, right? Like I said, you can play the break out of it and it can continue going, right? But just understand the risk involved with that. Because even with this breakout, this candle did come back and retest that area before it continued heading back down. So are you going to hold or are you going to cut, take profits, and let price set up for you again, and then look to take entry? Let's go look at this though on the 1-minute time frame, and let's see what price was saying in here that possibly could have got us in earlier. Had to be seen. All right, so if we look at it on the 1-minute time frame, it's pretty much telling the same story, right? It's getting us closer to the 78 area, right? But again, the 1 hour was not telling us to the downside. But if we're looking at the 1 minute and the 5-minute time frame, we are making lower highs, right? So we can just read that information. But like I said, I would just prefer for you guys to wait for the hour time frame to clearly tell you that it doesn't want to do something. Once it clearly tells you we're headed to the downside, or it clearly tells you we're headed to the upside, then let's start looking for trades. I don't want you guys trading just to trade. It's always going to be another opportunity. You don't have to take the first trade out the gate. You don't have to be the first one in the trade. Just let price talk to you. Right now, in the moment, price was not talking. Like, it's inside of a range. It's not talking to you, right? I always say go with the flow, not against the flow. This is you going against the flow because now you're guessing. Because it's not telling you. It's really not telling you, right? It's not telling you. So just keep that in mind when you're placing your trades. So hopefully that helped you guys understand what to do with the fibs on the lower time frames, and how you could look to get a better entry on those smaller time frames. All right, so let's go over the bread and butter. I said the LeGhetto is the 5-minute time frame down. Also talked about being in the leg of price. Are we in the leg of price or are we in range? If we are in range, meaning price is running sideways, building up that gas, that's what I prefer to see on the lower time frames and play it off our resistance level. If we're headed to the downside, play it off our support level if we're headed to the upside. If we're already in the leg of price, give it 2 to 3 candles. If you're not in that trade, 2 to 3 candles in a trend in a particular direction, just give it a moment, let it pull back and come get you inside that range we talked about. Identify the last pivot points and fit that range. Like I showed you guys when I took it to the charts. Find that swing high, swing low, let price pull inside that 50%, 78% range. That is going to be your best entry. Because I understand, and if you go watch my videos, I understand the deeper the pullback, the stronger move should be in the opposite direction, right? And I love to take entries off that 78% level. That is my last line of defense. I have a whole fib video talking about that if you're not familiar with fib. So please go watch that. Also, build confluence and go with the flow of the higher time frames. The higher time frame is saying down, then every time frame that you use should be saying to the downside. The higher time frame is saying to the upside, every time frame you use should be saying to the upside. If the higher time frame is inside of a range, don't trade it. Don't trade it. Wait for price to pick a direction, and then let's take that. Let's wait for our buyers to step in or wait for sellers to step in, and then we'll go ahead and play it to the upside or to the downside. But if price is not talking to you, then there's nothing to this to it. It's just noise, right? You gotta eliminate the noise and just identify when price is speaking your language. And that's when all your time frames are aligned, building confluence off the higher time frame, and we're going to go with flow with the higher time frames the same. All right, so we have come to the end of this session. I hope this information in this session is beneficial to you and along your training journey. If you have any questions, feel free to reach out to me. But until next time, I thank you guys for breaking bread with me. You guys stay blessed.